Would you describe your investment methodology?
Okay, so the fund focuses on European corporate bonds, but it has some flexibility from a top-down perspective to own some high yield and to own some government bonds. We use a team approach. We use that to decide on what sort of asset allocation we want to make within the fund. And from a bottom-up perspective, we rely very heavily on a team of credit research analysts. We have about 80 research analysts globally that help us formulate our bottom-up and stock-picking views.
Where do you find the highest amount of value in the corporate bond universe?
Yeah, I mean, obviously yields have come down a long way since the middle of this year, and there's obviously less value in the market than there perhaps was a few months ago. At the same time, we still think that you can own good quality corporates, blue chip corporates in the core economies of Europe and the US as well, who issue in euros and own some very attractive income streams in that way. We also see some value in some of the banks as well, although it has to be very name specific. Some banks we are comfortable with and some we're not comfortable with at all.
Do you feel comfortable investing in the riskier segment of the investment grade?
I mean, we still see value, but clearly less value, as I was saying, than only a few months ago. At the same time, you know, we look at credit as corporate bonds as a very low beta, low risk asset class, and consequently, I think it's reasonable that yields should have fallen, especially post the actions of the central bank in the summer. We still see value in the BBB part of the universe, so the lower rated part of the investment grade universe, and indeed in parts of the high yield universe as well. But with valuations having, as you say, having risen over the last few months, I think you need to be selective, and that's why we have a big resource in London, and we try and differentiate between the companies that we lend to.
You think European companies will suffer a lot from the difficult situation in Europe?
So I think operationally it will be difficult, especially in Southern Europe, which is one of the reasons why the European Corporate Bond Fund is underweight Southern Europe. I think that there are some very good companies, but they operate in a very challenging environment, and that will weigh on their performance. I think, though, in the high yield space, again, you have to be very selective. So, you know, it's not perhaps the easier trade that it was in the past. I think now is the time to differentiate between the strong and the weak.